Jim Chanos out with a huge, shocking interview here today on Fast Money. I wasn't expecting this, and even more so, I was not expecting them to put this on their YouTube channel. So I'm very happy they put the whole 22-minute interview on their YouTube channel. I'm going to go ahead and react to this very famous short seller, Jim Chanos. He talks in this video about his short selling of Tesla stock, why he's betting heavy against Tesla stock. Obviously, I'm going to react to that and give my opinion. He's talking about what's going to happen with his opinion on potential, let's call it future conflicts between countries. He's talking about the state of the market, if he expects the market to go down quite considerably from here, which, spoiler alert, he does. And we'll dive into what his opinion is of all that. A lot to go through in this video. This is a beast reaction. I had to grab a glass of chocolate Oatly for this one because, yeah, this is a bit of a beast one. I appreciate every single person that subscribed to the channel. 22,700 plus subscribers now on this channel. I appreciate each and every one of you. If you're looking to join my private style group, the private wealth group, check out the pinned comment down there. Let's just get straight into this, guys. This is a beast. Appreciate you.
This is our headliner for this evening. Jim Chanos, founder of Chanos and Company. Jim, it's a pleasure to have you with us. Thanks so much for joining us.
Welcome to my hood.
I know, your new hood, or not relatively new,
down here 20 years.
20 years. I didn't realize that long.
Yeah.
What do you make of this memo, this notion that we could be at war with China? It feels like people don't want to believe it or don't believe it.
Yeah, I mean, the war in the Pacific is serious stuff. I mean, let's not forget we have a land war in Europe going on right now. I mean, sort of a World War II, tanks, artillery, things we haven't really seen in our lifetimes. And so a shooting war in the Pacific, all bets are off. I mean, I certainly hope that doesn't happen. And but yeah, I mean, it upsets everything because of what Guy said. I mean, whether it's supply chains, whatever. I mean, having China go to war with the West would be just apocalyptic.
How does that factor in, if at all, to your view on China and how you view that market in terms of opportunities for you?
Yeah. Well, obviously, our view on China, which is now 12 years old, I mean, has been based on the financial system and the debt and real estate markets over there. And not a whole lot changes. Obviously, China will become more insular. I've been watching the China reopening trade like everybody else has for the last 6 or 9 months, and sort of marveling at it.
If you want some good context about what's going on in China right now, it's a very important company reporting earnings this week, okay? And this company will tell you exactly kind of what's going on with China because they have a big presence there. That company is Starbucks, okay? Starbucks, I don't know if you knew this, but Starbucks has been opening about a store every 9 hours in China. A store every 9 hours. That's ridiculous, okay? And so nonetheless, I think Starbucks, important earnings. Just if you want context about the China reopening, how things are going there, pay attention to what Starbucks has to say about their Chinese business specifically.
But I don't think there's any way to handicap it from my perspective as a hedge fund manager. I mean, again, if it happens, it's the unintended consequences will be severe.
Jim, do you think, though, going forward, we're just seeing, the situation with Russia and Ukraine was so simple. U.S. multinationals had to take a stand about the Russian aggression. It's a little different with China. When you think about our reliance from a manufacturing standpoint, our U.S. multinationals' interest in that emerging middle class, which has been a part of the bull case for 20 years now in China, how would that play out? Because I really feel like that could change the dynamic for a lot of U.S. companies.
Yeah, I mean, I think that we're far more intertwined into the Asian economies, in particular China. And so anything that would end that and bring this into a Cold War, much less a shooting war, I mean, just has to be just a major event for not only markets, but geopolitics. I mean, it's scary stuff.
Jim, we talked about multiples of this market, expensive, not expensive. I mean, 30,000 feet. What are your thoughts? I mean, again, that don't fight the Fed mantra that's been out there. For some reason, people want to look past it when it doesn't sort of...
I mean, in terms of potential conflicts between China and the U.S., I just don't have a strong opinion on that. The countries are so intertwined. It's very hard to see that. It's always a possibility, but, that's just pure speculation in my opinion.
Line up with the market going higher for them.
Well, I think, we don't try to time the market. But like anybody else, I have opinions. and things are not cheap. I mean, they're not as expensive.
I don't know about that. You're known as a short seller. If you're a short seller, you're usually trying to time the market. That's just like, if you're a long-term investor, it's a whole different perspective there. But short selling, it's very, a timing type game.
As they were, say, a year and a half ago. On the other hand, the market is at 18 times forward. Profit margins are at all-time highs, so that has not mean reverted. And one of the most mean reverting time series in all of economics and finance is corporate profitability. And it's been stubbornly good and high. But since I've been on the street in 1980, not one bear market has ever traded above 9 to 14 times the previous peak earnings. So whether it's 87, 89, 90, 94, 2002, or 09, if you think earnings are peaking now, at $200, that's a long way down, right? That's 1,800 to 2,800. We're not.
He's talking S&P. Which, that puts the S&P, if that were to happen, his hypothetical scenario there, that would mean the S&P 500 would go down anywhere from 25 to like 40%, 45% from here, actually 50%. So, yeah, that's extreme, okay? Very, very extreme from here. It doesn't mean it can't happen. It's a possibility. I think you would really have to see major, major recession, major job losses, and profitability of the biggest companies, because we've seen a tremendous amount of the smaller companies have disastrous profitability numbers, right? But we haven't really seen it from the biggest of the big dogs, but if you saw it from the biggest of the big dogs as well, then you're talking about maybe you do get that S&P down under 3K, which would be vicious, absolutely brutal to go through that. But my gosh, that would be there's been so many steal deals in this market, in 2022. I can only imagine S&P at under 3K. That would just be insanity.
We're near that, and so you have to hope earnings hold up, and you have to hope. Look, right now the market in the space of really 6-7 months has gone to. Corporate profits are going to be up 12% this year. Inflation's coming down to 2%. The Fed may be easing at the end of the year. That's pretty much nirvana if you're a bull. That's what markets actually forward pricing think right now. They're wrong all the time, but people are pricing in a pretty nice Goldilocks scenario.
Are you trading the markets directionally overall?
I'll tell you something that's freaking me out, okay? And I've been watching these earnings come in so far this earnings season. It's something troubling I'm seeing out there. Is a lot of these companies are basically saying first half of this year is weak, but don't worry, second half of this year is going to be just fine. I don't like that, okay? I think it's very hard to predict how the second half of this year is going to be, whether it's going to be good or it's going to be bad. And it just feels like almost companies kind of making this excuse of like, oh yeah, it's going to be bad first couple quarters, but everything will be fine. Don't worry about it. And it's like, how do you know? How do you know it's going to be fine in the second half of this year? A lot of companies also said that the second half of this year was going to be fine, and it wasn't, right? And a lot of companies were then saying, oh, second half of the year it's going to be weak, but, first half of this year is going to be strong. And now all these companies are saying first half of this year is weak. And so that's a troubling thing you're going through in kind of the economy right now. And with a lot of these companies' earnings is everybody's kind of pushing it to the future. Like, oh, it's going to be okay. Just wait a little bit. And it's like, is it really going to be okay? Are earnings really going to be there? Or are we just talking crazy here?
Or is it just individual?
No, in our hedge fund, we are slightly net short, slightly net long. And so until recently, we were actually slightly net long. I think we've gone to back down to zero line, plus or minus. And in our short-only funds, we're 60 to 80%. And so it just depends on the individual names in those. And we try not to take a lot of systematic market risk in our hedge fund.
A lot changes, though, when you go from 0% interest rates to what could be 5%.
Yeah.
And certainly accelerate fundamental stories you bet against when you do your deep fundamental analysis. So I'm wondering, are there positions you think look even better now because that environment changes? Maybe the debt service is too heavy a burden, et cetera?
Well, one of the areas I'm marveling that has held up as well as it has, with a couple of exceptions in subsectors like office, has been commercial real estate. I just don't get people buying almost any kind of commercial real estate that doesn't see good demand at this point at 3%, 4%, 5% so-called cap rates. It makes no sense. SL Green, which we are short, New York offices, been short now for a couple of years, trades at a 5% cap rate, and it's levered massively to its cash flow. And I just don't want to buy New York office buildings right now at a 5% cap.
Hey, you might think it's impossible for me to agree ever with a Tesla bear, but I'm 100% with him, man. 100% with him on this part here. I don't think we're going to see eye to eye for the Tesla segment and here in just a bit, but this part, talking my language, man, I'm right with you.
And the balance sheet is leveraged 15 to 1. It just makes, and there's all kinds of stories like this out there in the commercial real estate. As you know, we're short the data centers, which I think is one of the worst businesses I've ever seen. They trade at 100 times earnings. And earnings are the metric because CapEx equals depreciation. And so there's just all sorts of odd anomalies in the valuation space of things that are just in the stratosphere still that sort of make no sense to us.
Yeah, sometimes things look cheap and they're actually more expensive than, like the Intel quarter, for example, was a disaster in that world. Debt ceiling, and politics are boring. We don't really talk about them. And I'm not suggesting we're going to go down 2011 path when U.S. debt got downgraded. But it's clear that there's a faction of people that want to push the envelope on this. Is that something that concerns you, or we just sort of slide through this like we typically do?
No, I mean, again, it's that would be kind of another black swan that no one thinks will happen, including me. Just when push comes to shove.
You know, it's completely random. It's amazing if you take somebody away from their set, like they feel so uncomfortable. And these other folks, Melissa Lee and the guy Adami and the Dan Nathan guy, they just seem very uncomfortable at this set on Miami. I mean, usually when they bring in people at that Manhattan set, like everything looks so like comfortable and whatnot. They just seem uncomfortable in their commentary and kind of their body language, everything. It's interesting.
We're going to pay the interest on our debt. But who knows? Could be wrong.
Really? Yes. You're still short, correct?
We are short. Yep.
But you trade around that position.
We do. It's been bigger.
They're
and
talking
small.
about short Tesla now. So here's the Tesla segment. All right, juicy, baby.
But we are still short.
What is the fundament? What is the thesis now?
So what I would point out is what I mentioned today on social media, which is it's interesting is what the bull case has done. The bear case has been pretty consistent, that competition was coming in, margins would have to come in, sales would slow from the torrid pace. What I'm more amused by is how the bulls have effortlessly shifted from, in October, this is the only company still growing 40 or 50%, and you can pay 60 times earnings. $4 last year. In October, the stock was $240. Now that earnings estimates have come in hard for 2023, up 10%, $4.40 versus $4. Now the narrative seems to be, well, yeah, there's a price war going on, but the legacy auto guys are going to be hurt a lot more than Tesla is. Okay. But that just shows you that the auto business is a tough business, right? If you've got to cut price as well as raise price for ebbing supply and demand, you're in the auto business. You're in a cyclical business. And his margins, which peaked out in the high 20s, gross margins.
A few things, okay? First off, all businesses are tough businesses. There's no such thing as an easy business, Jim Chanos, okay? You have to adjust pricing all the time. Sometimes it's lower, sometimes it's higher, sometimes you got to figure out different product fits. Like every company does that, right? You know, Microsoft might have one of the best business models in the world. Why doesn't Microsoft just go up double their price tomorrow? Seriously, why doesn't Microsoft just double? They can't. You know, every business is a tough business, right? Apple's got a great business model. Why don't they just double the price of the iPhone tomorrow? They can't, right? And so, you know, every business is tough. Now, listen, and I pointed this out to the private group earlier today. Listen to how he keeps talking, and he brings it back to he. He keeps bringing up Elon Musk throughout a lot of this. And you'll see him mention he. And this is a problem with Jim Chanos. And this is a problem with a lot of these Tesla short sellers. I believe a lot of these gentlemen, okay, I believe a lot of them have an agenda against Elon Musk, specifically. So they're very tempted to make these short positions and including some of the people that go on Fast Money. They have such an agenda against him. They really want to see him fail. And therefore, they make these bets against Tesla to get slaughtered again and again and again. And I don't get it. But I do get it because they just have so much disdain for specifically Elon Musk. And you can tell it because Jim Chanos keeps saying, he, you'll watch us here. And he keeps bringing it back to he. And it's you realize Tesla's a massive company. What are we talking about he over and over and over again here, okay? Watch this.
Well as raise price for ebbing supply and demand, you're in the auto business. You're in a cyclical business. And his margins, which peaked out in the high 20s, gross margins, are now heading, we think, into the high teens, where they were before they opened China. Everybody forgets Tesla lost money through 2019 building cars in the United States. It wasn't until they opened Shanghai and that ramped in a major way that...
comparing Tesla of 2023 to Tesla of 2019 is just disrespectful, man. Just disrespectful. It's just ridiculous. The amount of progress this company's made on the manufacturing front, on the supply chain front, on just how they produce their vehicles, cost synergies. It's like night and day different company than where they were at 4 years ago. So, to bring it back to where they were at 4 years ago is just silly, in my personal opinion.
Margins took off. And China right now is their weakest market. So he's, they're wrestling with some issues. And the stock is still at almost $550 billion market cap, is trading now at 20 sometimes gross profits. It trades at a premium. I looked before I got here. It actually trades at a premium in terms of its multiples to Ferrari and Porsche.
Wow. But does it tell you something?
And it shouldn't? Wait a minute. It shouldn't trade at a premium to Ferrari and Porsche? Two companies that are these little baby companies? Who cares? Seriously? What are we talking about here? We're talking about Tesla, a game-changing a company that has the opportunity to possibly be the biggest company in the world. Certainly one of the biggest companies in the world. And we're talking about Porsche and Ferrari, and it shouldn't trade? That doesn't even make sense. That's just absolutely preposterous, ridiculous, okay? Holy smokers, that's no jokers.
I don't know about the mentality of the Tesla's stockholder, that the earnings have been reported, that it is known now that their margins are going to decline by a lot. And the stock still went higher on the back of the earnings. And by the way, Ford has said that we have to cut the price of the Mach-E because of Tesla, that the competition is getting to the point where they have to follow what Tesla is doing. Isn't this a case of Tesla trying to just gain share? And so in the long run, they're better off because they'll have the volume and their margins will be better.
Melissa, can I introduce you to some other stocks in my portfolio in the last 3 weeks that are up more than Tesla, that are going bankrupt? It's been an insane 3 or 4 weeks, much like July, August. And so you've had stocks like Carvana triple. You've had Beyond Meat, which we think runs out of money this year, up 40%, 50%. Tesla's not alone.
So, Jim, let's talk about Tesla in China, okay? Because we know that they have this great market share here in the U.S., and I think Melissa just mentioned that Mustang Mach-E price cut. They're making those cars in Detroit here, okay? But the cars that Tesla are making in China, they have less than 10% market share over there. And a lot of these local manufacturers are obviously doing much better, and I see no reason for that to change. Throw in what we just talked about, this geopolitical potential. Our situation with China is not getting any better, but yet he's placing more and more emphasis on that market from a manufacturing standpoint, from access to rare earth materials for their batteries, and then also the demand for the cars. It just seems pretty obvious to me that this only gets worse before it gets better in China for them.
Well, Dan, I've been saying kind of half tongue-in-cheek that Tesla is a Chinese car company, and it really is. The bulk of its production is there, and we think almost all its profits are generated there. And so you have all kinds of risks now in light of our earlier discussion about the warnings. But on top of that, you have repatriation of capital risk. You have BYD and others just taking massive market share. And Tesla trades at a premium to those companies who are growing faster than they are in China. So if you want to play all these things, there are now lots of ways to do it. If you want to play the growth of EVs in China, you can buy BYD, you can buy NIO, you can buy Li.
Do you own BYD?
No.
Many of those companies people want no piece of. They don't. I mean, they don't have the team Tesla has. They don't have the opportunity Tesla has. They don't have the long-term profitability or short-term profitability Tesla has. And many of those companies, especially if they're Chinese companies, people don't want to own Chinese stocks. Like, are you kidding me? Like, no, like this same man was just talking about all the risks of China and the U.S. relations and whatnot. So who wants to own Chinese stocks? You know what I mean? So of course Tesla's going to trade at let's say richer multiples in those companies. Like that's the way it is, right? Like why would let's say you had $5 million to invest in an EV company. Like why would you invest in some Chinese company that you don't even see their products over here in the States, right? You don't know how their brands is received in China versus over here. Why would you buy one of those stocks with all that risk and potential delisting someday or something like that versus just buy Tesla? Like that doesn't make sense.
And then the NASDAQ. I don't think it's in the NASDAQ. So if it's in the NASDAQ, we own it. But I just think that it's really the choices now are increasing, and the bears were wrong on competition. It took a long time to show up, but I don't think they're wrong now. I think the competition is growing, and it's here.
Let's play the trade around it.
I think that's the same thing you said. Honestly, I've seen so many Jim Chanos interviews. I honestly think this is the same thing Jim Chanos was saying 5 years ago. The competition's here. It's here now. I honestly think that's almost identical words that he would have said 5 years ago. So I don't think that we're getting much of a different Jim Chanos. And as somebody that lives in, I would say I have two houses I spend the most time at. This Vegas house, right? And then my Arizona house. And when I'm in Arizona, when I'm in Vegas, I see a lot of EVs. You know what they are? Teslas. You know how many other EVs? Very small amount. Like it happens so few and far between that I see any sort of other car company. It's EVs out there. I actually take notice. I'm like, oh wow, that's a different brand of an EV. Wow, that's interesting. Whereas Teslas, it's like a driver, especially where I live here in Vegas, man, I drive around and it's like Tesla. Like, it's a different environment. And so this whole competition thing, man, Jim Chanos been talking about that for 100 years now. It's the same thing. He's still talking about it. And it's like, show us in the data. Show us in the real world. And you just don't have proof of that in either.
Game traded down to 101 and change, rallied 75% or so since. Carter Worth last week said the stock is going to trade up to 175, middle of that downtrend, and fail. It's sort of doing that today. You're trading around it. Where's the ultimate level for this thing to get to a point where you say, you know what, that's it, I've got enough, this is my level?
Well, so again, the street estimates have come down dramatically. So street estimates for this year were $6. They're now 4 and change. We think the number has a 2 in front of it this year. And so then the question will be...
So basically, Jim Chanos believes that Tesla's profitability is going to get annihilated this year. Completely annihilated to have something with a 2 in front of it. Interesting. That's his take. Not my take. That's his opinion.
Will investors say, gee, this is cyclical? I mean, earnings were cut in half. And what kind of multiple? I think it'll always trade at a premium over the intermediate term to other OEMs. But I don't think it should trade at 5x premium to the other OEMs. And that's...
Hold your horses, Jim Chanos. Why should it not trade at 5x? The multiples of other, let's call it competitors, if we want to call them that, okay? Why should they? Tesla's outgrowing almost all their competitors by 20x, 50x, 100x. Like, why shouldn't they trade at 5x, the multiple? Like, that just doesn't make any sense. Like, you shouldn't... Here's the thing. If I got company A, company B, and company A is growing their revenues and their net income at 10x the other company, it should trade at a minimum of 10x the valuation. That's the way stocks work, okay? So, to say, well, they shouldn't be trading at 5x the multiples of these other car companies or whatever is ridiculous. Yes, they absolutely should, because they're growing so much more rapidly and they have so much bigger of a long-term opportunity versus all their competitors. And Tesla's the future, like Tesla's where everybody's going to EVs, right? Whereas all the other auto manufacturers have to prove they can get there, which puts them in a huge financial risk, okay? So that whole is just like, come on, man. Come on, Jim Chanos, man.
It is. I mean, again, the other OEMs trade at 3 to 5 times gross profits. Tesla's trading at over 20 times gross profits. And so the magnitude of the valuation discrepancy is enormous here. And I think at some point that's going to close dramatically. Now, is it $40, $60? I mean, I don't know. We'll have to see. But I don't think it's 170.
Is there anything...
He just talked about the stocks going to $40 to $60. Interesting.
That you think maybe I don't get this part of the Tesla story, or this is the one wild card that could happen that would cause me to rethink my short. I mean, you've been a directional short for a long time. The position size changes over time, but is there something that sort of gnaws at you?
Well, yeah. I mean, something gnawed at me for better part of 4 or 5 years. The stock was flat for 5 years and then took off.
Why didn't you cut your short then?
We did. Yeah.
Were you completely out of that short at the time?
I don't think we've ever been completely out, but
okay.
we vary positions from 0.5% to 5%. 5% is our limit, and things rarely get over 4 for us.
Where are you
so
now?
when people talk to us about a Tesla, whatever, they always mistakenly assume it's our only position. Right? And there's one of 43 names in our portfolio.
That's a fair point for Jim Chanos there. You know, it's not like he's all in Tesla short, but I think something that needs to be said. This is a huge risk for short selling, folks. Is let's say you shorted Tesla stock 5 years ago. You know, you've lost hundreds of percent, if not 1,000% plus, right? Versus, you know, if you invest long in a position, right? Let's say you invest in Tesla and it went to zero. You lost 100%. But when you short these stocks, you can lose hundreds of percent. You can lose thousands of percent. If you get it really wrong, you can lose 10,000 plus percent, but that's you would already be bankrupt by that time. Like you're completely done, right? And so that's a risk with these shorts. I mean, Jim Chanos, like, look at how much Tesla stock's gone up. That means he's down on the shares he's been short for a number of years now, right? He's down hundreds and hundreds of percent. When Tesla was at his peak, he might have been down 1,000% plus 2,000%. That's ridiculous, okay? That's a 10x in reverse. Like, it's hard to even like wrap your head around that, right? And so that's just the massive, insane, epic risk of short selling stocks that just I think a lot of people don't think about sometimes. Is like you can lose way more than 100%.
I mean, we have a few other ideas. Right now, it's kind of in the middle of that range. But I debated a noted Tesla bull a week and a half ago. I stand by what I said. I think if Tesla were to show reacceleration of earnings, I think we would rethink our position. Like, suddenly 450 became 5 and 6 and 7 again. I think their profits are going to be under pressure, and I think it's going to be relatively permanent.
I really, really hope they do reaccelerate earnings, not just for us shareholders, but just so Jim Chanos can then make up another excuse to stay short Tesla, because that's what he would do. He would just come up with another, I'm going to stay short for this reason now at this point in time.
I don't think they're going to be earning 28, 30% gross margins. I think it's too competitive a market at this point. They're too big. They've been successful, right? But law of large numbers. And now they're having to go down market to...
Law of large numbers, Jim Chanos, stop. This isn't even like that big of a company yet in terms of like law of large numbers. You can talk about an Apple like that, law of large numbers. You can't talk about Tesla like that. Like, this is a company that just made, 1.3 million cars last year? They're on their way to doing 10 mil plus. They're not even close to the whole law of large numbers. They will get there someday, but it's not even like close, not even remotely close at this point in time. Like, come on, man.
More share and more volume, and that puts them right square in, with the Japanese, German, and U.S. auto manufacturers.
Right. All right, we got 42 other names to talk to you. Jim's going to stick around for one more block. We'll also talk. We're back with famed short seller Jim Chanos, founder of Chanos and Company. We spent a lot of time on Tesla, but you are short.
I mean, at the end of the day, the simplest way I could put it and to wrap up that whole Tesla segment there is comparing Tesla to these traditional auto manufacturers would be like after Apple launched their smartphone, their original iPhone, comparing Apple to the traditional Nokia, BlackBerry, and the traditional like cell phone companies like Motorola. That's just ridiculous. Like a whole different business model Apple had going. Same exact thing with Tesla. Whole different business model. It looks like somewhat of a similar product, but it's night and day difference in everything about it.
and long other things. You referenced the meme stock mania, and you are actually long one. And wait,
well, we're long and short, kind of the same one.
Yeah. Walk me through that trade. That's fascinating.
So we are long the AMC preferred, the so-called APE shares, APE. And we've been bearish on the common for a long time, since the post-meme stock run-up. And Adam Aron, to his credit, is trying to raise capital, which I think he's doing the right thing for the company. And they realized this loophole last August where they could issue preferred shares. They couldn't issue any more common. The shareholders wouldn't let them issue any more common. They found kind of a backdoor around that, and then they did a big private placement with a private investor who agreed to vote shares on behalf of converting these. So what's going to happen is going to be a shareholder vote in March. They filed the document on Friday night. And the preferred shareholders can vote, the common shareholders can vote. We think there's enough votes to force conversion, and so one APE will become one share of AMC. And they're still trading at about $3 difference. It's a classic arbitrage.
I didn't know there was math in Miami, but apparently there is. But I'll ask you this question. So go to 30,000 feet, and what does it say about the state of the market when you can see names like that move 100% one day and 100% the next day? Does that mean we're closer to bottom, in the middle of this whole thing? What does it say to you?
Well, since the first quarter of 2021, which I keep saying was the most speculative market I've seen in my lifetime, the meme stocks, the SPACs, I mean, the NFTs, crypto.
That is actually a big statement by Jim Chanos there, saying that market we were in at the very beginning of 2021 was the most speculative he's ever seen, because this is a man that had went through the tech bubble. So, to say that is a rather large statement.
Every time the meme stocks have taken off, it's been the end of the rally, not the beginning of the rally. Huh. And that goes back to January of 2021. There was a similar rally in June, July of 20.
That's a great point. Jim Chanos can bring up a lot of great points. Unfortunately, just when he falls flat when he goes on Tesla, man. He's just somebody trying to slay a dragon in regards to Tesla, and he's not even nearly well informed enough. Like not even remotely close. You know what I mean? I'm just like, holy smokes, man. The man's rather intelligent around so many other subjects, but yet he wants to try to slay this dragon that's Tesla out of ego. It's strictly out of ego. It's not out of intelligence. It's an ego play. All it is, man. And but anyways, he's bringing up another great point here.
21, another one in the fall, and then we had one in March, April of 2022. We had a big one in July, August, mini one in October, November, and we just had a big one in January. And every time retail comes back into these names to squeeze the shorts or do whatever they're going to do, it's a pretty good sign that people have lost their fear, and they're buying near bankrupt companies or companies like this in restructuring. Bed Bath & Beyond's a wonderful example. I mean, that ran earlier this month, and their bonds are trading, I think, now at 4 cents on the dollar. 4 cents.
Yeah.
So if you really thought Bed Bath & Beyond was going to turn around and become a great company again, you would have a 25 bagger by buying the bonds, and nobody wants them.
Right.
But the stock they love. That makes no sense.
What is the environment like with rising interest rates?
That's another great point he brings up there. If you actually think Bed Bath & Beyond, play it from the bond side. Don't play it from the stock side. You get a way better return if that was the case, right? So, another good point.
With the market decline that you're forecasting or expecting to be a short seller. And I'm asking you, I guess, this in the context of Hindenburg Research issuing its report on Adani Group.
Yeah.
And that stock in India just wiping out tens of billions of dollars in market cap over the span of just a few trading days.
And in context of what? Maybe refine your question a little bit.
People are really listening to short sellers these days.
Yeah, I mean, well, I mean, Hindenburg is a.
Hey, whose ring alarm was that, man? What in the world's going on here? Who's got their device out? Is that you, Jim Chanos? Is that your ring device?
A very unique example. They do phenomenal work, and the Adani report was amazing.
Who else thought that was your ring device going off right now, man? When they open the door like that.
I read it over the weekend. And so, we, like other investors, when they put something out, we rush to read it. But look, I mean, this has been an eternal struggle between the bulls and the bears, and short sellers continue to be vilified. I mean, just get on social media, and so many stocks have a rationale for ownership because of the short position. And I just keep warning people, please don't buy worthless pieces of paper because someone has a different opinion than you. Right? Do the work and understand what these stocks might be worth as companies before you just say, oh, it's got a big short position, I'm going to buy it. It's not a great reason.
It's short is a completely fair point. At the end of the day, these people that want to try to defeat the short sellers, it's an ego play for them. I'm going to beat the short seller on this. I'm going to squeeze them. It's an ego play. No different than shorting Tesla stock. Elon Musk. Ego play. They're doing the same thing you do, Jim Chanos.
So, Jim, you just mentioned over the last 2 years now that when you've seen some of the stuff, the sort of activity that we're seeing right now, happen, the exuberance, it's kind of meant the end of this rally. We're 15% or so off of those October lows. We've seen a massive rotation over this period since those lows into financials, into industrials, into, some other groups. And mega cap tech has underperformed. But to me, if I look at like a Caterpillar or if I look at like a JP Morgan, I see valuations that might make a whole heck of a lot of sense given what I think is going to happen to the economy. So are those presenting some interesting shorting opportunities?
They are. I mean, in fact, we talk about the meme stocks and Tesla, and people like to talk about it. But we have far more core positions, Melissa, in what I would call massively overvalued, crummy, well-known businesses where the returns on capital are terrible or cyclical, and people have bid them up into the stratosphere. We're marveling at General Electric at 40 to 50 times earnings. General Electric. I mean, it's gone through restructuring. They spun off healthcare at the end of the year, and estimates have just kept coming down. And now the estimates for this year are $1.60 to $2. That's on an adjusted basis. And I point out that GE puts out one of the most hysterical earnings press releases. There's like 18 pages of adjustments. So the adjusted is $1.60 to $2. Was $2.40 a few weeks ago. Stock's at 81. I mean, this GE, is a cyclical company, often trades at 10 to 15 times earnings. It's at 40 to 50 times. And there are other names like that I don't want to go into. Dan and I were talking about some of them. Companies where earnings are going to be down meaningfully this year and flat from 2018, 2019, trading at 40 times, 45 times. So there's a lot of pockets of silliness. They're just not in some of the names that were silly in 2021. Yep. Those have come down so much. But they're nonetheless, for what the
Dow stocks
companies are, they're pretty pricey.
Yep. Jim, it's been a pleasure. Thanks so much for coming by. Thanks for allowing us into your neighborhood.
You guys should come by anytime.
So Jim Chanos, I appreciated that, right? In kind of hearing his perspective, and there's definitely some things I agree with the man on, as with anything in life, you might disagree with some folks on some things, and there's definitely some things I disagree with Jim Chanos on, and there's some things you agree with him. But like I said, the thing that differs the Tesla short, in my opinion, based upon watching this guy talk about Tesla for years, is I believe the epic mistake he's making is the same mistake, all these other short sellers make all the time, is they try to bet against a Tesla stock out of an ego play of trying to slay the dragon. And there's tremendous shorting opportunities all the time in the market, man. And, to try to short that baby, it's a tough proposition. It's a really tough proposition. You're talking about one of the strongest shareholder bases out there, right? And you're talking about one of the most, if not the most educated shareholder base on what's really going on out there. And you're talking about betting against Elon Musk. I mean, there's so many stocks out there that are better opportunities to short. But at the end of the day, I think there's just a lot of people that want to slay that dragon, and the dragon's just you can beat it up sometimes, but it's going to eat you. It's going to burn you up before it's all said and done. So, it is what it is. I appreciate everybody joining me. As always, 22,700 plus subscribers on the channel now. Thank you so much. Also, if you're looking to apply to join my private wealth group, my private stock group, check out the pinned comment down there, and have a great day.